Three, two, one, go.
Hi, everybody. Thank you for choosing FXStreet for your live coverage of the NFP. I'm Dale Pinkert, joined by Mauricio Carrillo, Yohay Elam, and Valeria Bednarik, the best team on the net to react to the reaction. How's everyone doing this morning?
Hi, everything's fine here. How are you guys?
I am doing great. Looking forward to this big event.
Hi,
Yes.
there, guys. It will be a good show today. This is interesting because we are an international team today. Yohay Elam is in Barcelona. You, Dale, is in San Diego, California. Valeria is in Buenos Aires, and I am right now in New York City. So this is a really
Are you
good team
sure?
all over the world.
Are you sure, Mauricio? Maybe you have jet lag. You've been everywhere. I recommend you play that song by Johnny Cash, I've Been Everywhere, Man.
It will be
So
nice.
200 plus is what the market's looking for, my friends, my trading warrior brothers and sisters.
Yeah, the market is waiting for 222, something like that. The unemployment rate remains steady at 5.3%, but I have a feeling that this report will focus the attention. People will focus their attention in wage, after what we have saw last week, showing the smallest gain.
Did we lose you?
Wage since yeah, if the main readings come in line with expectation, a bit above or a bit below, the attention will move towards wage, and if that number is bad or good, will determine the market move. Of course, if the headline is strong or really poor, then that will be the market leader.
Yohay, what are you thinking going into this? Dollar's been pretty strong. Going into this report, it's almost like the market's already discounting to some degree a strong number, and that the Fed will move in September. Where's your head at?
Yeah, well, the Fed left the door open for a hike in September, but left all its other options open as well, and made it clear once again that it's all data dependent. We heard from Dennis Lockhart of the Fed that if we have okay NFPs, something around above 200,000, 225, like it's expected today, this time and in September, a hike is on the way. Not everybody shares this view, but basically, of course, this is a key data point towards the decision in September. The dollar has been a bit stronger thanks to the stronger than expected ISM non-manufacturing PMI, but on the other hand, the ADP NFP was a bit weaker than expected. So I believe that real expectations are around the official ones, around 225. Sometimes there's a gap between the sort of whisper number and the official expectations. So I believe that.
Go ahead.
I think if we'll get 250,000 and up, it'll be dollar positive, and under 200,000, it'll be dollar negative. And otherwise, as Valeria said, it depends on the wages. And I believe we'll have some kind of small rebound. Nothing too exciting, but better than last time.
And after yesterday's news about the pound and the pound breaking through some support levels, everyone favored the pound over the euro because it had the potential, like the US dollar, for higher rates. Has the technical picture changed for you, Val, and for you, Yohay, on pound dollar?
Yeah, for me, it has been a huge change in sentiment. I don't know how the market will price in today's report and therefore what will happen next. But the fact is that many MPC members were joboning about coming soon, a rate hike coming soon, a rate hike is around the corner, and all of a sudden the Bank of England, just one voted for a rate hike, right? And meaning that we have had a couple of months, maybe 8 or 9 months ago, two voting for a rate hike at 7 steady, and all of that, blah, 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 and we have just one voting in favor of rising rates. The market was expecting a 3, at least. Right. That was the main reason why the pound was holding against the greenback. It was holding because the market was expecting the UK to be the second one to raise rates following the U.S., right? And all of a sudden they disappoint the market. I'm not saying it's okay, it's right or wrong. I'm saying just what happened, right? They disappoint the market. Furthermore, the forecast of inflation in the nearer term has been downgraded in the inflation report alongside with the Bank of England meeting. So it was all of a
Was it Carney again that led the market to believe that they were, headed in that direction?
What? Sorry, I didn't understand what you...
The central bank chief of the Bank of England, there's been a lot of misdirection on outlooks for the UK, hasn't there?
Yeah, it has been a lot of that. Meaning one time he was claiming for the coming soon, as I said, rate hike. Then he says that a higher pound is pushing inflation lower. So there's a lot of back and forth in his wording, and it was highlighted yesterday with the announcement. Anyway, it's hovering around 55 right now, so we're actually lacking a clear directional trend, right? At this point, if you take a look at my chart, we are in the base of the latest range, right?
Yes.
But if we lost 54.60, 54.70, where we bottomed yesterday and a previous one from late July, I do believe that there's scope to fall down to 52.50. Okay, not of course today in the upcoming sessions, but that will determine whether the bearish trend will continue or not.
How about you, Yohay? Yesterday's action switch to negative on the outlook for pound dollar?
I don't think so. I think, well, the Bank of England did give the pound a blow with only one member voting for a rate hike and talking about lower inflation due to the strength of the pound. But basically, the Bank of England wants to be the second major central bank that raises the rates after the Fed. It doesn't want to act on its own, but it's still going to, the next move in the UK will be raising the rates, and this will happen well before other central banks. So perhaps they wanted to keep the pound a bit more constrained, but in general, I think pound has an advantage against the yen, against the euro, and will continue giving a fight to the US dollar. Of course, data dependent. I think the Fed will act sooner and will have a rate hike in the US sooner than later, but the pound will be relatively resilient.
Thank you.
Yeah.
How about go ahead, Val.
I was thinking that I do agree with that. And of course, as I always said, you'd have to take a look at the weaker or the stronger currencies against the greenback when we have a report like this, the payrolls. So if the number is really disappointing, the probability is that the pound will rise faster, right, than the euro, for example, or the Japanese yen, which is at lows, and against the greenback, I mean. But if the report is good, given that the euro and the yen have been weakening against the dollar, the chances then are to trade those pairs. Sorry, sorry. And commodity currency, I don't know why they are strengthening right now, but keep in mind that we have payrolls in Canada alongside with the US ones, right? We have employment data all together, so it's a no-no as usual when we have both payrolls at the same time in the same day.
And the Aussie has gained against the euro in recent days. Euro-Aussie coming off its recent highs around 150. Of course, you and I talked about that yesterday, Val, about Stevens saying the Aussie has fallen far enough, and then we looked at that monthly trend line. Any change of view on Aussie, Yohay, and talked to Val about it yesterday? What are you thinking here?
Well,
yeah, there's that monthly trend line that Stevens looked at when he decided not to raise rates. Lower rates, yeah.
Yeah, well, the Aussie got two good news this week. First of all, from as you said, Stevens, they suddenly changed their tone. They were not that worried about the strength of the Aussie. And the second thing was that the employment report was quite upbeat. It showed a gain of almost 40,000 jobs, much better than expected. Mm-hmm. So each time we've seen sort of a bounce in the Aussie, but it didn't go too far. So I think the market is still bearish on the Aussie. Next week we have industrial production from China. Aussie traders are worried about falling commodity prices, about the slowdown in China, about the falling stock markets in China. Everything is, of course, related. So I think that if the Aussie cannot really rally on good news, really good news, then perhaps we have a bit more room to the downside when the opportunity comes on the next week figure.
Yeah, we have a lot of data coming from China next week. I was thinking about that earlier today. And of course, it will weigh on the Aussie and help it recover if the data is positive, or of course, send it back lower if it's tepid.
Yeah.
So guys, we got the question in the last page is about what do you see in the dollar Japanese yen today after the payroll data?
It will depend on the market reaction, of course, but I do expect that a strong report will push the pair above the 25 level, the high set earlier this week. And of course, the main target for that move will be 25.85, which is the year high and the level reached early June with the release of my May payrolls. Right? And of course, if the report is not as good as expected, the support I'm following in the short term is the 24.40 area, where the pair has been contained for most of June and July until it finally break above it this week. So if we lost that level, 23.70, there seems a probable bearish target, and even below, down to 30 if the market suddenly turns really dollar bearish. But still, I don't see the pair falling that much. I do believe that if the report is bad and we have some bearish movement in here, we will meet some buying interest around this 23.30-70 area.
If you pull up the weekly chart on the yen, Val,
Yeah.
you could see how people are making the case for one more high up towards 27.28. We have the first drive last year, the second drive at the beginning of this year, and a third drive. The pattern looks incomplete until we make a new high now.
Yeah.
And that comes in, I have lines around 127 or so, 128. Yeah. And people have been talking about that 128 for 6 months now. Looks like it could manifest on a good number. We could be there by early next week if we have 250 or so today. What if we get a 300 number? Everyone's going to say that, the Fed rate hike is a done deal. So
yeah, sort of, but yeah.
I don't know. Also, if you look at the RSI on that as well on the weekly, even if the yen makes a new high, we're going to diverge pretty good. We already diverged at the last high, so a lot of non-confirmations there. Maybe even on the daily. So I think it could be a very good short up there. I'm surprised it's had this much strength because Yohay, I look at Treasury yields, and Treasury yields have come down quite a bit in the last 3-4 weeks, down to 220 again. And normally that's U.S. dollar yen negative, but that's a risk-off trade. But the yen has really held in there quite strongly. What are you thinking?
Well, yeah, these are a bit mixed signals, and we could blame the summer for the lack of correlation. I think markets are waiting for a stronger signal from the non-farm payrolls report, as the Fed said, data dependent, and then I think we'll get a rechaining of correlations. I mean, we'll have a good report. We'll see Treasury yields going higher and the dollar yen going higher, and if we'll have a weak report, we'll have the opposite reaction. So yeah, it's a bit confusing. It's a bit non-standard what we're used to, but I think things will get realigned relatively soon.
So the pound looks like, you know, all we're doing is after the shock of yesterday moving sideways.
Yeah.
To me, it looks like 550, 580. Any rallies up there should meet pretty good resistance. It almost looks like it's, you know, was in a car wreck yesterday, and all we're doing is trying to stabilize, work off the oversold condition by moving sideways. So it looks worse to me than the euro, and more people hate the euro than hate the pound. So see what happens.
Yeah, it looks a bit like a dead cat bounce.
Yeah.
Waiting for the NFP for the next move lower.
Right.
For me, pound level is 55.60. If we take over that and we advance above it, the bearish continuation will be denied for me, right?
Yeah.
If we pull up to this level and then retreat back, then the risk will remain towards the downside in here.
Good level. Yeah.
That's my level in here. There's some small gap in my charts from after Bank of England meeting, so maybe the pair can attempt to fill it today.
Yeah, also in euro dollar, we're getting a bit, I mean, price action has been a bit messy of late. I guess maybe markets don't know what to do now that Greece is off the headlines, but perhaps the non-farm payrolls will also give the euro dollar a new direction, realign correlations, get markets back, wake them up a bit. Yeah.
Okay. We are hoping so. It has been a pretty interesting summer, right? Because usually summer is a time when the market does not move much, and we have those days of 40 pips all day long in a range. But this summer has been so far pretty interesting. The market has maintained a good portion of the previous volatility, right?
You mean your winter, Val?
It's my winter, yeah, but I'm in the North Hemisphere summer. You don't care about our summer doldrums.
Right. Is it cold down there in Buenos Aires in the winter?
In here, we have really wild weather. Today we are not really cold. It has been maybe 2 weeks cold. Now it's more like spring temperature. It's terrible. It's terrible.
Is it raining a lot?
It's raining a lot since Wednesday, and it will probably continue until next week, maybe 4 days more. It's terrible. It's gray. It's all gray. But anyway, it's Friday, and payroll's Friday. So here we are.
10 minutes to go.
Yeah, we got a question from the chat. It's Elias or Elias. He's asking about the US dollar, Canadian dollar. There is any idea or reaction? What do you expect, Valeria and Yohay and Dale?
Okay, no one wants to. As I was saying earlier today, we have the employment release, the release of the employment reports in both the United States and Canada, right? So it's probably the latest pair I will attempt to trade today, unless it's clear that one report is positive and the other one is negative. Then that will set a clear direction. But right now, with the two payrolls ahead, it's a no for me. Sorry. I don't know if you guys want to add something.
Totally
a lot of people still calling it a bull market tied to the hip with crude. Crude looks, look at your chart here, Bill, looks like it wants to rally a little bit here. So that's what's pressuring Canada right now. Maybe we get like a little ABC rally back to 45 or so.
45? You meaning crude? Sorry, I was thinking of cat.
Crude. Yeah, and crude.
I was thinking of
45.60. It looks like where your red line comes in the crude.
Yeah. Sorry.
Yeah.
I was thinking of the cat.
So, I mean, You can't trade Canada without watching the oil, whoever asked
Yeah.
that question. So if you want to be a Canada trader, it's not only what's happening in the dollar, although the dollar is pretty tightly correlated with ups and downs in crude, but you have to pay attention to the crude oil market, since Canada is considered by a lot of FX traders as a petrocurrency. So
Yeah, and the fall in oil prices has contributed to Canada probably falling into a recession. The
yeah.
Bank of Canada expressed worries. I mean, everything is of course correlated, and everything weighed together on the Canadian dollar. Just repeat what Valeria said. Would just wait for the dust to settle on both employment reports. If the NFP is positive and the Canadian one is negative, the direction is clear, or if it's the other way around. But if both are positive or both are negative, it's going to be messy, and it's better to stay away, I guess.
Aussie making new session highs.
Yeah.
The Aussie. Yeah.
Uh,
Yeah, and by the way, what is your take in the oil? That is at multi-month lows. What do you think, Val?
Me?
Yep.
Okay, sorry, I didn't hear you call for me. As I was talking yesterday a bit with Dale about this, I do believe that we are close to a bottom. I have been bearish all the way down until here, and I do believe that maybe it's not yet bottom this level, but we are getting closer to it, right? Still, there's a long way to go for a reversal, but I'm seeing that maybe today's report can take us to fresh lows and even closer to 40 next week, but I don't see oil really falling below 35. It's something unthinkable for me, you know. So maybe we can see some bounce in here, bottom starting to form. Maybe not a strong bounce and a change in the dominant trend, but at least some consolidation, and some attempts to recover. Short term, to be honest, I do expect selling interest if we search up to 47.70, 47, this area, 46.70 or so. I believe that there's little hope for the oil to recover, right? It will be closer to be a selling opportunity than a buy, but still, and I'm still expecting lower lows, you know. But I do believe that we are approaching to a long-term bottom in price.
Well, the Saudis are hopeful of that. There was an interesting story, guys, about the Saudis floating a debt issue. So definitely they need the cash, and their war on the frackers and shale industry in the U.S. is not really working out for them, and they could be setting up for some type of cuts. I mean, if they have to float debt, it means cash flow to the country. Trying to get market share isn't really working for them. So they may have to try another tack sometime late summer, early fall.
So far, they haven't refused to do so. They have refused to cut production, but at some point they will be forced to.
Yeah, they want to maintain their market share.
Saying. If they need to float bonds, that's saying there's financial pressure on the fiscal side of the kingdom.
What were you about to say, Yohay?
So far they wanted to maintain their market share. It helped sort of contain Russia a bit, push potential oil production in Iran also lower, and of course hit shale. So I think they did maintain their market share, but the U.S. shale industry showed how flexible it is, and I think it'll also keep oil prices from falling too far, because if prices fall, more rigs are shut, there's less production, and once prices rise again, there's more production. So I think the U.S. shale industry is currently serving as sort of a balancing factor on oil prices. So yeah, we might see another dip down, maybe even below 40, but I don't think it'll last for too long, and prices could bounce back up from there.
Okay. We are in the same channel then. 4 minutes to go.
Yeah.
Remember, guys, we have a small delay, so you will hear our comments like 30 seconds, 1 minute after the release. But you will surely see the reaction in your chart right away.
Yeah, dollar is a bit weaker towards the release. I don't think it means anything, but that's what's happening. Euro dollar 109.40. The pound doesn't really rise.
The
Bill,
pound is
where was your line in the sand in the euro again that it had to stay underneath to maintain the bearish bias?
to the upside, you mean?
Yeah, what does it have to stay underneath to? Say you were short. Say you were short euro.
11.20.
What's that?
11.20.
Okay, thank you.
It's a long way to go. That's the swing high of last week.
Yeah.
Yeah, and we
You
have.
think there's a buy stop above there, Yohay?
Yeah,
One?
I think there.
At least a one lot? Okay.
If you take a look at bigger time frames or even the 4-hour, you will see that the pair has held around that level multiple times since early May. So
Yeah, it
that's
doesn't look that bad on it. It doesn't look that bad. Unless it takes out that 108 level you were talking about, Bill.
yeah. And
Yeah, I guess that's the wider belt, 108.15 to
Yeah.
111.20.
And there's also, if you look at a daily, guys, you just draw a uptrend off the low, comes in around 107.60 or so, the trend line off the 104 low.
Yeah, move
Takes
this
me right there.
there.
Yeah.
Well, you could, or you could take it off the 104 low. It comes in a little bit underneath where we are.
Yeah.
Yeah. Right around that 108, 107.60 level.
Yeah.
Bulls might try and defend it there if it got down there.
1 minute to go.
Yeah, the
We
market's
got a question here.
It's like watching a space launch.
Any guesses? Last minute guesses?
I think around 200,000.
250.
200, yeah, 220, between 200 and 220. And anything below 220 will be bearish for the US dollar.
285. 285.
Oh my goodness.
My guess is 260. But
260.
Really, really nervous market. No release just yet. So the euro is
yeah. Nervous fingers over there.
One,
Here we
two,
go.
go, NASA, go. Oh,
115,000.
bad number.
215,000. Yeah.
215?
Yeah.
Okay, dollar positive.
No, 215. Dollar negative.
Wait, 0.2 as expected. Unemployment rate as expected, 5.3.
Dollar's rallying big time.
Canadian dollar, Canadian data was so far what? Unemployment rate 6.8. Participation rate bad in Canada. Not much.
Dollar is a bit lower, but not no.
The dollar to position is approaching 25 if we take the trigger some stops, right? The euro is losing 900. Oh, bye-bye, euro.
I don't understand why the dollar is stronger after the weaker than expected number.
Yeah.
Well, it's only a bit weaker than expected, but...
June was revisited higher to 231, the previous one. The previous reading.
There goes the pound challenging the lows. What a nice reversal in Aussie.
There we go. Jen, 1 pip, 2 pips, 1.
Stock market steady on it. Gold selling off on the dollar strength. Maybe one more shot down in gold towards 1050.
had some positive revisions. Last month's number was revised to 231 instead of 223. But wages are really unimpressive, so they rose 0.2 month over month as expected, but year over year it's 2.1, which is mediocre, I would say.
Yeah, maybe the number we had last week, the quarterly wage report last Friday maybe was pushing investors to think of a really worse number today in wage. So that may be the reason why the dollar is advancing.
All right, we're only 50 pips away from that move high in U.S. dollar yen.
Yeah.
I don't know.
We're waiting for the NFP to buy dollars. It seems a bit regardless of the actual results.
Yeah.
Participation rate remained at 62.6%, which is also unimpressive, to say the least. For those trading the Canadian dollar, we have
Bad news in Canada, right?
as expected, 6.6K jobs gained. Unemployment rate 6.8 in Canada, more or less as expected.
Okay, so what now? Pound held above that low. We
One hell of a candle.
Yeah.
Yeah, so euro dollar short long, with some questions here about what to do.
Right now, nothing.
Yeah, right now nothing. The first 15 minutes.
I will wait. Yeah, I will wait until past the first 15 minutes after the release, and then try to take a position if it's possible. Take a look at gold. I have been following this small figure in here, and we're about to challenge the lows.
Yeah.
And the fact is that we have multiple lows in between 81 and 82. So if we take that, we may retest the 1071 low.
You can take it out.
Yeah.
Why am I echoing?
A small trend line. It has several times in the top of the range.
The real unemployment rate U6 is down to 10.4%, down from 10.5. That's a small positive. I get the feeling that the market was just waiting for the report to buy dollars. So.
Yeah, I'm thinking that
an excuse.
It's enough. Okay, about 200, it's enough. I was really not expecting such a dollar demand with a 215, to be honest.
Well, guys, you guys owe me a Coke because I was the closer. In the
Get anything.
Owe you a beer.
Oh, of course, better.
Yeah.
Pay up, man. Skype him over a beer, Yohay.
Yeah. See if that works. I don't know if you can drink it, but yeah. The virtual hug. Yeah.
You drink it, he could watch you, and he'll celebrate.
Okay.
So, Aussie has Aussie has the best reaction to it, holding up the best still.
Yeah.
Euro Aussie probably made new lows.
Now we got a question from the YouTube live page from Lucky Everyday. He's asking about the pound dollar. What's your take on the pound dollar right now?
If it takes 54.60, it will probably continue towards 54.20 in the short term. But it's clear that the dollar it's dominating the market right now, and we need a little push high more to trigger some stops or convince the dollar bears to give up right now. The battle is going on around critical levels. If you take a look pound, euro, dollar 20 cents, struggling with 25.
And Nick from the chat is asking why the euro dollar is falling despite of negative than forecast, the price below expectation. Why the US dollar is rising?
We have been commenting that a
Yeah.
few minutes ago. It seems that the market just needed a little excuse to buy the greenback back, and we have revision of a previous number. Or maybe the report was not as bad as the market was expecting, considering the previous releases we have since last Friday about wages and the poor ADP reading we have on Wednesday, and so. But we don't know how to explain the market reaction. That is why we always said you need to wait and see, because you cannot predict how the market will react to such a big report. Anyway, I'm thinking that the one that should be really happy is Jordan from the S&P, because Swiss is finally finding some weakness. Do you think someday the dollar shaft will reach 1 again? I have been waiting for the level for years. I know that ever since they lift the peg, it has been a crazy ride in here, and it has been not a tradable, most likely tradable pair. But anyway, I was really expecting this one to reach 1 at some point, and it's not doing it.
Yeah, I was also expecting the dollar to strengthen against the Swiss franc once again, but especially as we know that the Swiss National Bank continues intervening in markets to weaken the franc. So
that's a good proof that intervention is not always useful.
Yeah, well, they raised the white flag back on January 15th, and since then they're trying to fight it from time to time, but success is limited.
The action in U.S. dollar yen is not that impressive.
No.
And I thought that for sure it would have the ability to clean out the 568 high. If we don't get a good close in the yen, you could have a failing rally here. So watching that, and that's part of the risk off thing. I'd like to see. Do you have treasuries, Yohay? You know where the 10-year yield went on this number?
No, I don't have it available, but I would say that often the dollar yen reflects the best reaction to U.S. events, and I think this is a good case. I mean, the headline number was a bit disappointing.
Yeah.
The dollar rallied anyway across the board, but we see it retreating relatively rapidly and against the yen. And yeah, as you said, it seems like a failed rally. This 125 level wasn't really, the breakout wasn't confirmed, and we probably needed a much stronger number in order to remain above that level.
So if we have right now we're looking at a 1-hour chart, if you could put a daily up on the yen, you could see that despite this wide range on the candle, we're still a shade higher on the day, but it's just grinding up. I'd say under today's low, it's vulnerable to go to where Val was talking about yesterday, the 330 level, and that we get through that 2.5 is possible. So I'm not impressed. You don't know what a candle's going to be until it closes, but someone sold it to protect that 25.68 level. So
I was thinking also that this report is not enough to say that a September rate hike is a done deal. So here we are again waiting for more clarity on whether the Fed will or will not move rates in September. It has been, I don't know, the longest wait ever, right, guys?
I don't think they're going to do it.
You don't? I still believe they will.
I think they will because they want to show us that they can do it. That rates are not going to stay zero forever, which I think some people in the markets believe. But yeah, but as you said, this report leaves all the options open again. I mean, it's okay. It's around expectations, above 200,000, but not something definitive like above 250,000 that you would say, okay, a rate hike is getting closer, or well below 200,000 that you would say, oh, the Fed will probably rethink everything. It sort of keeps the tension high towards the next NFP, and yeah, we'll be waiting once again. Wait and see.
Dollar's starting to fail, so see here. And gold is coming off your line, Dale. It held it.
It held the line, and
crude, despite a strong dollar, did not take out the low about 5 candles ago. Just an observation.
Yeah. Stocks are, however, not happy with the news. They're down.
This is Bednarik from the chat that is asking for a comment on JPY Japanese yen. From the pound Japanese yen. Yohay?
About pound yen?
Yeah, pound yen.
Well, what we've seen in pound yen is, I mean, what we've seen in the pound yesterday as well. Big fall, and on the chart I have on my screen, we can even see a gap. But in general, I think the trend remains up, and the pound is, assuming the Fed will hike eventually, or hint about a hike. The markets will expect the Bank of England to act as well, and the yen will remain behind. So I see. We had sort of a nice, quite a dip yesterday, but in general, the trend for me remains to the upside.
Yeah, it wants that 200 number, don't you think? As long as we hold that 92 level or so, starts taking that out, then we're going to go for that 91.
Yeah, on NFP reaction so far, I think the strength of the dollar is beginning to wane off a bit, more so against the yen, but it's still up.
Yep. We have not still past 15 minutes of the release, so it's a bit too early to just think of what may happen next, particularly after the US opening. But though it's making new lows, below previous one, maybe stocks fall in panic and a possibility of a rate hike, the dollar will continue advancing. I don't know. It's a possibility, like Dale says. The dollar is holding its gains against the CAD.
Yeah.
Well, the Dow Jones is supposed to open at.
Sorry, go ahead.
Well, the Dow Jones is supposed to open at like a 4 months low. No, 6 months low. And
yeah, we're almost 1,000 points off the high. No one's talking about the high was 18.3, I believe.
18.356.
18.1, yeah.
Yeah. This was the latest bearish rally, and we have corrected up to the 50%, and then we're back. And today we're breaking below. Yesterday, in fact, we broke below the full. We completed the full retracement, and there we go. So it's not longer valid, but anyway, it was a probable bearish target I had in.
Yeah, we could explain that by stock markets think, okay, the Fed is going to hike, so that's negative, but the U.S. economy is not really that strong, so that's also negative. But yeah, but once stocks move in the other direction, we could of course find another explanation. So I think yeah, we'll have to wait and see a bit more.
I do believe that it's time for a huge correction in stocks markets, and particularly in the US. I mean,
How big? Val, you said you wrote something about it. What were you thinking? 10% in the market? That's, you know, we haven't had a 10%. The Dow is almost there.
Yeah,
we haven't had a
15.
10. Go ahead.
No, I was thinking about 15, 16 in the Dow as an immediate target, as a probable first target. And if
Okay,
lost,
that the October low, yeah, of last year.
it will be even farther down to 14.
Maybe it's going to go to the black line now.
Yeah, it seems a bit too much, but yeah, it can. We will keep on watching that lines. I won't erase them, I promise.
Well, by the way, there is a question here in the chat is about if investor may expect the rate hike in September, or what do you expect for a rate hike?
It's pretty much what we were saying. This data is not enough to say there won't be a rate hike in September, but it's neither enough to confirm and make it of it a done deal, you know? So we are waiting, again, in wait-and-see mode, as Yohay had just said. I don't know. We will have to wait a bit more to see if September will be the date. Maybe September payroll release. Sorry for that, but of course the data is good enough to keep Fed in the path of rising rates, right? It has not been something awful that says, oh no, they will rethink about this, they will reconsider everything. But that's the most they can say about it. It has not been enough. It's not enough.
So we have a classic deflationary scenario.
Also.
Yeah. I don't know why I'm echoing.
My tendency is that they will raise the rates because they don't want to be seen as creating bubbles, and they made it clear to the markets that rate hikes will be very gradual and they have to move so markets will believe that rates can rise. But yet again, it's a close call. If we have 100, 200,000 in the next report, markets will begin believing that it will not happen. Anyway, the Fed is, I think, unsure of itself. Some want a rate hike, some don't. So far, the Fed has been, when there's been a doubt, they stayed out. They preferred going to the dovish side. So, yeah, we'll probably need a strong report to make it clear that there's going to be a rate hike.
Be interesting to see where the market's at that time point, and if that has any influence. If we're selling off into a potential Fed hike, whether or not they do it. Wealth effect stuff, you know?
Yeah, or in other words, working for the stock market. We've seen James Bullard in October.
I tried to be more subtle about it, but yeah.
Yeah, but after Donald Trump's performance yesterday, maybe I'll try to be less politically correct, or as I said. Anyway, just to point out, Bullard, remember James Bullard, president of the St. Louis Fed, said in the middle of October last year, when markets were falling, that he wants to keep QE on for another month, and that sort of marked the low point in the markets. Eventually, they did end QE, as everybody had expected, but
put a floor on that October massacre with the Ebola going on. I was in the hospital then. You know, it's interesting with what the Fed is doing. If they say they're not managing stock market expectations, but I do recall the last press conference, Yellen talked about raising rates in case there was a shock. And I know that they're looking around and seeing what's happening in China and emerging markets, and they want to just bring rates up because they have limited tools if there is a shock. So I think that's really the reason, is they don't have tools. They used all their bullets, and they don't have any if a shock happened before we went through some type of gradual normalization of rates.
Yeah, I think what you said goes along with what Glenn Stevens of the RBA did this week. I think he also wanted to regain another tool, the verbal tool of saying that the Australian dollar is too low. So he removed that line, and now he has the tool back in his shed in case the Aussie dollar goes too high and he wants to push it down again. So I think Yellen might want to do that as well, raise the rates at least once this year to have that tool back in the shed.
Yeah, I think that's the only reason.
Probably because inflation is really low, and jobs reports are okay, but not blockbuster. We're not seeing jobs causing any inflationary pressures whatsoever. So.
Well, think about it. What's the only thing going up right now? First, commodities were under pressure by a strong dollar. Now equities are under pressure by a strong dollar. So the only thing really, everything's going down except with the dollar going up. So I guess until this dollar rally ends, and in fact, Yellen put the last lid on the dollar top. So we'll see if we're going there again to take it out. So when the dollar's good, nothing else is except cash and being short. That's the way the board looks right now.
The dollar CAD is breaking the high, the initial high of the news. So maybe we have another round of dollar buying now.
Yeah.
And gold is pressuring the trend line. It's really wanting to fall. really.
Stocks want to rally. Dow's trying to turn here.
Yeah.
I mean, a strong dollar should be positive stocks. That's the way it's been. The only thing that, up until recently, you had a good dollar, you had a good equity market. But I'll tell you, these correlations connect and disconnect all the time, don't they, guys?
Yeah.
Yeah.
Ever since 2007, we have inverted correlation, coming back to correlation, and back to inverted, and so.
They're interesting to talk about, but you can't trade them. You have to look at each chart like it's its own unique individual and forget about the jigsaw puzzle.
I don't believe so. I do believe that watching the market as a whole, it's really important, because maybe correlations are not always working, but they are in the background. So it helps you take this, right? Helps you understand what all the market is thinking, and pretty much trading is trying to anticipate what the market is thinking and nothing else. I don't know, like this report, for example, it has been not good enough, it has been disappointed, yet the market decided to buy the greenback anyway. So why would I trade against the greenback thinking, no, the report is bad, so I won't sell the greenback, when I'm seeing that everyone everywhere is buying it, right?
Yeah.
So watching the market as a whole, seeing that the metals are falling, seeing that all the currencies are under pressure, are telling me that the market wants to buy the dollar, regardless the number.
Yeah, as I've mentioned before about the Aussie, despite really two important events that were supposed to be Aussie supportive, the big rally never happened, so it's also telling.
Canadian dollar is pushing and pushing and pushing, and it's dragging the rest lower, I do believe. It's helping the greenback advance everywhere.
Yeah, I think we're indeed seeing a second wave of dollar buying.
Yeah.
We got a question. Hi again. We got a question from the chat. Is Jay asking $1?
What was the question, sorry?
What is your take on the New Zealand dollar?
New Zealand dollar. I don't know. You want to answer it, Yohay? I don't believe that we have bad news in New Zealand. I have honestly didn't follow it. But
It looks ugly.
Looks
Yeah, it
what?
was beaten quite hard in recent months. 2 rate cuts from the RBNZ. Last week, an unimpressive, or this week, an unimpressive employment report. In general, milk prices have been falling in every auction, I think 10 consecutive weeks or so. Everything is going against the Kiwi. However, it did sort of find a bottom, maybe because markets had expected the RBNZ to cut 50 basis points, and it cut only 25 basis points. And but I believe it's only a dead cat bounce, and eventually the Kiwi will continue falling. Everything is just going against it.
New Zealand dollar, right?
I had
Yeah.
I had milk and cookies last night. Can't support the Kiwi though.
Yeah, and I had lots of cheese and friends who went there last week.
Oh, guys, thanks for putting up with me. So the only thing that really likes the dollar is stock market getting pretty oversold. Could pop from here.
Yeah, maybe when the dollar is king, all the rest are slaves or something, subjects.
Well, I mean, if the dollar's good, it finds its way into U.S. dollar-denominated assets. You know, I don't know. I just don't see the market turning real bad until the dollar turns bad. And, you know, a lot of people have targets in the dollar index up around 102, 105. There's one last stop around 99.5, 99 in the Dixie. Otherwise, you know, we're going to take out that 100 and go to those targets. So
there we go. New highs against the
new
euro
lows, you know, yeah.
and the visit and the CAD.
Okay, guys, let's do a summary just to before closing the live coverage. I want you guys to tell me what do you think what's happening today and what will happen in the days to come. Anyone first?
Okay, if no one first, I will go first.
I
Okay?
know, please first one, just one by time. I know.
Ladies first.
Ladies first, exactly.
Okay. We're gentlemen here. We're gentlemen.
What happened today is that the US NonFarm Payroll report was not as expected, not really bad, not really good, but the market wanted to buy the greenback anyway. It was looking for an excuse, and the number maybe have been worse than expected, but it's enough to keep the Fed in the path of rising rates, so the market is going back to buy the greenback, right? I don't know. As we said before, there's no clarity, right? They did not give us an answer. We are looking for a confirmation either if the Fed will do or not raise rates in September, and we didn't get it. But we are getting closer to a rate hike indeed with this number. I don't know. I do believe that we are going to see more dollar strength in days to come. I would like to see the U.S. inflation picking up, really. And I do believe that the change in the wording in the Fed we have last week with Elam saying that we need just some improvement in data, right? That some was enough to convince traders, convince markets that we're in the rising rates path. Sorry. Anyway, I do expect further dollar gains. Maybe some correction, consolidation right now until Wall Street opening, but I would expect some further dollar gains with afterwards. Let's see what happens. But the only thing that bothers me about further dollar gains, intraday talking, is that the pound is holding above this yesterday high, 54.66, and that the dollar to yen can take 55. If those two levels give up, we will have a lot of dollar demand later on today. That's my take. Okay?
Thank you, Val. Right now, Yohay.
Me? Sorry, couldn't hear.
Yeah.
Well, I agree with what Valeria said. Basically, markets wanted to buy dollars. It goes hand in hand with what Lockhart said, that this report is probably good enough for a rate hike, but it doesn't necessarily go with what other Fed members think. I'm not sure that we're going to see more dollar strength in the hours and days ahead because it was indeed a mediocre report, also, especially if we look at wages. So they're only up from 2% year over year to 2.1%. But all in all, data was sort of as expected. So I don't think this time we're going to have lots of echoes from this report, but the markets are going to look for the next data points in the week ahead. We have jobs, we have retail sales, consumer confidence. So it wasn't, in terms of the numbers of the NFP, it wasn't such drama as I had expected. But yeah, the next move in the next strengthening of the dollar depends on more data coming next week.
Okay, and Dale, what is your take?
Well, the dollar's finishing on a strong note, making new highs for the week, and normally when that happens, you could expect some follow-through into Monday, possibly turn around Tuesday. I'm more in agreement with Yohay that I think that there'll be a fade in the dollar probably Tuesday. A couple levels I have in mind is about the 107.60 level in euro for a possible buy, and then I want my preferred short would be US dollar yen over Canada sometime next week. I'd like to see if it is going to fail to take out that 25.60 level. So I just think there's still too many dollar bulls, and I think there's a possibility that before we go to that 102, 105 level in the Dixie, that we get a pretty good pullback here. So I can't chase the dollar here, and I'd be looking for potential reversals next week.
Great. So I have two more questions. There is quickly question and quickly answers. When the Fed will hike rates and how far the Fed will go?
Good question. We don't know. We expect it to happen in September, but as we have been saying, we have no clues on when. Yohay and I believe it will be anyway in September, no matter what, just to prove they can do it, as Yohay said. Dale is a bit more reluctant to believe so. Right?
Yeah, and I'm
Yes.
more in December.
I think that there's been so much trepidation for so long to do it, and you guys are right. Maybe they want to show their machismo, but they have less reason to do it now than they did a year ago.
They have
Because
less reasons.
economic numbers were better a year ago, except for employment.
Yeah, but
And
employment
inflation
is
numbers, and inflation numbers with a collapse in the commodity market and a strong dollar. If they do hike rates, they may see that as only exacerbating it. So that's the way I see it for now.
Okay, and
And
the
who
last
knows?
question. Oh, sorry, again. Sorry,
Go
sorry.
ahead. I mean,
continue.
who could get inside any of these people's heads?
I
And,
would
and why do we even try and figure out when they're going to do something? Why don't we just trade, and when they do it, they do it? How about that?
agree.
Yeah, positive approach. Yeah.
Okay, and the last question is right now for all of you guys, which is the most strongest currency right now, and which is the weakest one?
Clearly, the stronger one is the dollar, and clearly the weaker one seems to be Canadian dollar. At the time, short-term intraday, we talk about that. And Canadian has chances to continue weakening because oil is about to break the multi-month lows post yesterday at around 44.15 or so, right? 44.19. We are 11 cents away of that low. So for me, it's the weakest right now. Still, this one breaking clearly above 25 to confirm further upward momentum in the greenback today.
And Yohay, what do you think?
Yeah, I agree. The strongest is the US dollar, the weakest is the Canadian dollar, and on a wider level, commodity currencies are weaker and major currencies are stronger. First of all, of course, the dollar, and then also the euro and the pound are relatively okay. Also the yen. Yen is maybe the last major currency. So I would say it's dollar, pound, euro, yen. Aussie, Kiwi, and CAD. That's my top to bottom ranking.
And I agree with Val and Yohay.
Okay, guys. Thank you very much for this live coverage. It has been funny and great and valuable.
Thank you, guys. It has been great.
Very much.
Bye-bye.
Enjoyed it,
Bye-bye.
guys.
Bye.
Good hunting.
Okay, Dale, I want you to introduce the live analysis room and to
Yes,
invite people to come.
everyone can join us in the live analysis room. We're going to have a real interesting guest here for an interview in a little over an hour, and I'm sure the community is going to be sharing their views after the NFP through the use of screenshots. So join us and we'll get some decent looks. Thank you, everyone.
Okay, thank you. Thank you, Dale.
See you in Lar.
See you. I will type the link in the chat room so everybody can just go in there.
Thank you.
Click.
Good job, Mauricio. Thank you.
Thank you. Bye-bye. Peace. Hunting.